We have been tracking crude oil prices on a day-to-day basis, and Manisha Gupta joins us to tell us what's the latest on that front. Hey, Manisha, morning.
Hey, Nigel, morning. And well, we have seen the crude oil prices gain 2% yesterday, but we haven't been able to hold on to those gains in the Asian markets right now. So there have been all kinds of statements. The positive is that the Russian president now says that he is in agreement with OPEC and that they are working out the details on what output cut do they really need as they get into 2019. And that is what led the crude oil prices higher yesterday. But the markets still are looking at the oversupply. So whether it is the U.S. production, the U.S. inventories, the U.S. reserves, all of that has been rising and the demand is still not matching there, and that is weighing on. Also, even as we are looking at such volatile moves, there is hardly any long positions that are being created in crude right now. So the markets clearly are waiting for the crude oil prices to settle in and then take a position in that. As of now, we do understand that the hedge funds, etc., are looking at some support to start accumulating positions, but that still is some time away. So volatility is what we will continue to see here.
Okay, so volatility is what we are going to continue to see, but let's move on and go across to Mangalam, who's joining us with how the cues are looking from the derivative space. Mangalam, over to you.
Well, it's the start of a new series, December series. So as we do, just take a look at the last three December series. Of course, this doesn't lay a bearing on how this one is likely to pan out. But over the last three series, if there is something that the bulls can take heart from, is the fact that it's only gotten incrementally better. 0.8%, 1.7% and 2.5%. Although last three November series haven't been good. So this is something we will keep an eye out on. 734 runs made by the bulls this series. The rollovers have been higher, 71%. This compares with 69%. Now, optically, it looks like just a 2 percentage point higher rollover, but the long positions, they were rolled over to the tune of 74%, while the short positions were rolled over just by about 51%. So that's telling you that after a 700-point up move in this series, the bulls are a little more convinced of this continuing in the December series as well. So the FIIs who started the November series with a 29% long exposure have now started the December series with a 51% long exposure. The Nifty open interest is pretty much in line with where it has been over the last three series, 1.93 crore shares, albeit a little lighter than what it was in the November series. Where are the markers placed? 10,500 put and 11,000 call is where the markers are placed for the December series. Yesterday we saw a fair amount of writing at the 10,700, 10,800 put and 10,900 call was fairly active too. The put call ratio at 1.74 is something that warrants our attention. We will keep an eye out on how this goes because there are a lot of triggers for this series. Of course, right from the GDP to the RBI policy meet, we have the OPEC meet. December, it is election season. 11 December are when the results come, and finally FII flows. That is something we will be watching out for too.